So if you're watching this video right now and you're still wondering about reverse mortgages and you're still confused about the actual use of that particular type of financial product, then you're going to want to stay tuned and locked in as we continue our interview with Mr. Patrick Kerwin, who is a reverse mortgage specialist. I can't tell you, Andrew, how many times that I've discussed with my clients the opportunity that they may have within their own homes. Because quite frankly, many people just don't save for retirement effectively sometimes. And so this particular type of retirement tool could literally be really sleeping right underneath their noses. So make sure that you stay locked into this video as we continue to try to discuss with Patrick the benefits of doing a reverse mortgage and also who maybe should not consider doing one. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to help to make the difficult and confusing retirement process simple.
Absolutely, Andrea. And we do this by incorporating a team of expert advisors ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals to help us build a holistic and comprehensive roadmap that's going to let our clients know when, where, and how they can reach their retirement goals.
For specialized strategies on how to maximize your retirement income, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So for many of you who still may have questions about a reverse mortgage, which I'm telling you so many millions of people do, then this educational video is going to be suited for you because you just never know when you may have a shortcoming in your retirement and you have this pot of gold, which is your home, just that you're sleeping under. So I am still grateful that Mr. Patrick Kerwin has decided to continue this discussion to help us mobilize our thoughts to see if we should decide to do a reverse mortgage for our retirement solvency or to fill some of our retirement gaps. So before we do that and go into that interview, there are always 2 rules to retirement income planning that we like to give you. And what are those 2 rules, Andrea?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
So without further delay, let's go ahead and transition again to my interview with Mr. Patrick Kerwin as it relates to reverse mortgages. Hey, everybody. Once again, we are joined by, I would say now, the great Patrick Kerwin, the reverse mortgage specialist. Now, look, guys, we know, I don't deal with reverse mortgages myself. I told you that, you guys have, who have seen our videos, that we talk about working with specialists, people who we can rely on to do things that we can't do in order to provide a holistic retirement plan for our clients. And quite frankly, a reverse mortgage could be a part of that retirement plan. So it's great to have someone like Patrick to talk about these things because they can be very, very confusing. And so many people do have questions about it. So Patrick, once again, just say hello and tell us what you may be talking with us about today.
Okay, I'm Patrick Kerwin. I'm a mortgage loan officer with American Advisors Group. You may have seen our commercials on TV with Tom Selleck. We're the #1 providers of reverse mortgages in the country, and we're probably in the top 10 on forward mortgages as well. So Carson was asking me to comment on who should not get a reverse mortgage or who wouldn't it work for. It's kind of a hard question because I believe in reverse mortgages. I've had one on my previous house. I just bought a new house and I'm going to get a reverse mortgage on this one. I think it's the smart thing to have for anybody that's over 62 years old. That doesn't mean everyone can get it. If you're not 62, you're not going to qualify. So that would be one group that really couldn't get a reverse mortgage. I think the thing not to do is to wait until one spouse has passed on, because when you lose the income from the one spouse passing on, you may not qualify for a reverse mortgage when there's only one left. Like an example, I had a client with a $6,000 income for a husband and wife. This included a pension. This included disability. This included Social Security for both of them. You put it all together, and most of that income was coming in from the husband. If the husband passes first, the wife's income drops from $6,000 a month to $1,600 a month. It's going to be kind of hard for her to maintain the lifestyle. So in this case, I would suggest they get a reverse mortgage, which is kind of like a line of credit on the equity of their home. so that once he does pass on, assuming he's the first one, she can draw 1,000, 2,000, 3,000 a month tax-free out of the equity that's grown in the house, so that she's not forced to sell the house and move into more expensive accommodations like apartments. Apartments these days are costing 1,400 a month, and guess what? They go up in rents as fast as homes do. And homes this year are projected to go up about 20%.
Yeah.
So we don't really want to go into apartments that are going to be having 20% rises in leases. Most people are better off staying in their homes because they've already locked in their taxes, because if they're over 65, they've got most of their taxes locked in and their insurance isn't that high, so it's cheaper to stay there. So I actually recommend that everybody that's 62 or over at least consider a reverse mortgage and check into it and see if it would benefit them. Now, if you've got $10 million in the bank, you probably don't need a reverse mortgage. Most of us out here don't.
Yeah.
Most of us out here can't live on just Social Security alone. No. So what people do, there's two types of clients I get: a client that has a paid off house and a client that's already got a current mortgage. I've got a client right now who has only a $500 a month income from Social Security. Nobody can live on $500 a month. So he's doing little odd jobs here and there, but it's not regular. Now with him, he's got a $500,000 house that's all paid off. Would he qualify for a reverse mortgage? Technically, no, but because I can loan him around $300,000, I can count that as partial income, and he can actually take that as partial income. He can take about $2,300 a month for 20 years and add that to his 500, and now he's doing just fine. Okay, that's one kind of client. Another kind of client is somebody, maybe they've got a $500,000 house and they owe $250,000 on it, and they've got a monthly payment of $2,000 a month. With a reverse mortgage, we can take over, pay off the original mortgage, and they don't have to make mortgage payments until they want to. So if they're paying $2,000, $2,500 a month, they immediately have that as extra cash. Now, what are we going to do with it? Are we going to just spend it up so our expenses are high? No, we're going to invest some of that, put it in our retirement fund. But in either case, you're getting off better with a reverse mortgage. Imagine you had Amazon stock, you bought it for $100 and now it's worth $3,000. Wouldn't you like to be able to spend some of it? But if you spend it, it's gone. Wouldn't you like to be able to get a loan over the appreciation of the value? And you can. If you had that, you could get it from your broker's account. But if the stock goes down, they're going to call the loan. You're going to have to sell off a bunch of shares. So what we want to do is take your house that maybe you only paid $100,000 for it. Now it's worth $300,000, and maybe it's gone up $200,000 in value. Maybe we can loan you $200,000, and it's just against the equity of the house. And you can either make monthly payments when you want, or you can wait until you sell the house or the last spouse passes on.
Let me ask you something, Patrick. One, you said something really, really interesting. So reverse mortgage, that income that you pull out of that, it comes to that individual tax-free. So we now have another tax-free income source that we could provide for the client. We talk about Roth IRAs a lot on this channel, which we know now that you can put that money in after tax and it comes out tax-free. So that could be like life insurance is another vehicle that we use for clients in that arena. But you're telling us that you can utilize the money from a reverse mortgage tax-free.
That's correct.
That's excellent. That's a good read.
There's people that I've talked to that say have $3,000 a month coming in off Social Security, and what they're going to do is pull $2,000 a month out of their reverse mortgage, which is tax-free. Because it's tax-free, it doesn't put them in the higher tax bracket on Social Security income.
Yep, we talk about that a lot on this channel. So this is some really good information, not just for our audience, but for me, of course. That's why we like to send our clients to Patrick when we have an issue when it comes to reverse mortgage, of course. So you got tax-free income. And you talk about also that when a person has the amount of money inside of this reverse mortgage, they can pull it out as a monthly income. Now, and you also mentioned that it can last for a certain amount of years. Now, do you look at a reverse? Do they actually calculate that for that particular individual and say, hey, you have X amount of equity in this reverse mortgage that you can utilize. You can take X amount for this many number of years, and it should last throughout your retirement. Do they do that?
What we like to do is meet with people and look at their individual case, and we'll come up with an estimation. Like they have a choice. I mean, they can take a lump sum and take most of it out the first year, or most of the case they could take half the first year and half the second year, or they could say, okay, I just want $1,000 a month to supplement my income. Now, if you think about it, if you have $1,000 extra a month and no expenses associated with it, that's a lot of money. There's a lot of things you could do with an extra $1,000, maybe $2,000 a month that you don't have to pay an expense on. There's some people that say, you know what, I want an income for life. We have a program where we'll calculate how much money we can pay, and we'll pay you for life no matter how long you live.
Yeah.
Pay equity in your house. And again, it's a loan, so it's tax free. So we're not putting you in a higher tax bracket. You're not worried about getting some return in the market. In fact, the credit line is guaranteed by the government, just like Social Security is. And so you can count on that credit line being there just like you would Social Security. So there's no market risk whatsoever.
So Patrick, you've said a lot of great things about the utilization of a reverse mortgage. I personally, and I try to do this, I try to find out some of the downside, but you're not giving me any leverage here, man. So in your opinion, you don't feel like that if you're 62 and older, you don't feel like there should be any hesitation of at least looking into this for if you're maybe needing some extra dollars for your retirement income solvency. You don't think there should be any hesitation for those who may have the proper equity in their homes to at least take a look at this type of retirement tool.
Well, it's true. And, we've done loans. We can do loans of up to $4 million.
Wow.
So I've got a client right now with a $2 million home, and, we're going to loan him a little bit less than $1 million, and he doesn't have to make any payments on it until he passes. He's only 81, so he might live another 20 years.
He's only 81. I like that. He's only 81. Technology is great, right? We talk about longevity, but starting at 81, that's fun.
Well, the funny thing is a lot of people think reverse mortgages are just for people that are down and out, and it's kind of a last stage thing. Well, this guy I'm talking about, he has $500,000 in the bank.
Yeah.
He currently has an $80,000 a year income. Huh. He's still working, but he wants to have a fund there to make some improvements to his house and not have to worry. And when he does decide to stop working, let's face it, he's probably not going to work that much longer if he's over 80.
Yeah.
And, so there's all kinds of people in the best parts of town that are doing reverse mortgages with me. And I've several people with multi-million-dollar homes that are doing it. And,
see, and I think that's very good that you notated that, Patrick, because I think a lot of people associate reverse mortgages with basically being downtrodden. Like maybe they are losing their home and they spent all this time building up this equity inside of their home. And they certainly do not want to even imagine the thought of someone taking it. And I know you mentioned in the prior videos that that's not going to happen. But, like I said, our time is actually coming up to be limited right now. But I do want to continue to have this discussion with you, Patrick, about the fear of losing that home, because I think we really need to dive into that for a lot of consumers, because that's really, in my opinion, the number one thing that I hear from my clients is that when you do a reverse mortgage, you lose your home. So I'm going to have you to come back, if you don't mind, spending some more time with us to continue to help people to understand this very unique product.
They need to correct that statement. The fear of losing your home is with a conventional mortgage, not with a reverse.
Perfect. So we can end it right there. So, hey, guys, look, thank you guys again for tuning into this channel. I want to thank you again, Patrick, for joining us to continue to give our subscribers some education about a variety of retirement topics that I'm sure so many people have questions about. So, Patrick, tell everyone how they can get in touch with you one more time.
Okay, this is Patrick Kerwin. I'm with AAG. My number is 214-415-3773. I'm in the Dallas area, and please give me a call. My website is aag.expert/Patrick, and my email is pkerwin@aag.com. Please call me, and we'll just have an informal discussion. And in fact, even when I first meet with people, I don't even bring anything for you to sign. So it's all about information.
Great. Hey, Patrick, thanks again. And we'll have that information provided in the description below. And Patrick, we'll see you next time, buddy.
Okay. All right. Thanks for having me.
So I really hope once again that this video regarding reverse mortgages gave you some insight into whether it may be a good financial tool for you to consider at some point during your retirement. Please always remember that these videos are created for educational purposes only, and that you should always consult with your own financial advisor, tax advisor, and or attorney as it pertains to your own particular retirement situation. If you are looking for a fiduciary advisor to help you with these types of complex matters, please feel free to click on the link that we provided in our description below, and you can learn how you can become one of our high-value clients. For more information about this particular topic or any other topics that we've discussed in our prior videos, feel free to reach out to our office and also leave any questions or comments in the section below.
To learn more about our services and how we can help you to increase your chances of not outliving your retirement savings, make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that we've created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.